Steph, your largest position at the moment is the aforementioned Meta, having one of its best quarters ever.
Yes. Yeah, I'm to be honest, I'm inclined to trim a little bit, Scott. It's really big at this point in time, and a lot of it is because I was, as we talked about yesterday, a lot of it was because I was buying all the way down last year, averaging down. But look, this was an expense story. That's what I was expecting for 2023, and we got it, right? It's the last 5 months, you've had 25% drop in headcount. You had a 12% drop in expenses, and CapEx is down 14%. So we know that. We know this is a year of efficiency. The new piece, and I think the reason the stock has got another shot in the arm, is because now people are all jazzed up about revenues and how revenues by the second half of this year could actually grow double digits. So that's Reels. Reels is running with a revenue run rate of $6 billion last quarter. Click to Message has a $10 billion revenue run rate last quarter. We have very easy comparisons. We lapped the Apple privacy issues. So you could see something like 11 to 13% total revenue growth in the second half of the year versus declines last year, right? So that's where the narrative has changed. And the valuation is not commanding at 13.4 times 2024 earnings. But that being said, you know, the stock's up a lot, and I think it is prudent to trim when you have a 70% gain year to date. Yeah. But I still do like it very much for the long term.
You didn't even talk about TikTok, right? And the potential ban. I'm wondering how much of that do you think is in the stock, and how much of that has added to this last little push, and if in fact it doesn't happen, what that might mean?
Well, that's why I mentioned some of these other things that they have going for them. And I'm impressed that TikTok is still around, right? And yet Reels is up and running substantially higher from a year ago levels. They have done an enormous amount of work with AI, making Reels a much better experience. And oh, by the way, didn't even talk about digital advertising and the returns on investments that a overall Meta can provide for companies. And so it's still the company of choice when advertisers are looking for better ROIs. It's just softening now. That is actually a cyclical thing, not a secular thing. If that comes back, then I think you have even more upside to revenues.
You know, you've got a couple good stories to tell, at least, Steph. The other one, and it's a bit of a, I know you weren't prepared for this particular question. Can we throw up GE? And maybe a year to date on GE, because that's been a good one too, Steph, right?
Yeah, that one has been a good one.
Near 50%. Wow.
I know. I always talk about spins, right? And how I like when companies spin off other companies, right? Because mainly when you're a conglomerate, these companies within the big company, they kind of get ignored, or they're not as efficient, or the spotlight is not on them. And so when GE announced that they were going to spin out the healthcare business, and then next year they're going to do the power and renewables business, you have three very simple companies. They're not simple companies, but simpler stories to understand for investors. GE was a bear to try to understand in years past. So I give all the credit to the CEO, Larry Culp. He's executing on his plan. And oh, by the way, we now have an aerospace cycle that's on fire. And that's according to Boeing. And by the way, there's rumors that Boeing is going to up their 737 MAX production numbers. That came out yesterday. Yeah. They haven't announced it yet, but I suspect that's going to happen. That's going to benefit a GE who provides the engines for Boeing.